Collection. But I want us to also go back to Nairobi Security Exchange, and maybe we can actually hear from Geoffrey. First of all, I think it was last month you had the 7th Financial Market Seminar for Africa's 28 houses. Yes. You can bring us up to speed with that. What really was happening at this particular seminar? What some of policies and regulations, or maybe some of the projections that you had from that particular seminar?
Great. So the 7th Building Afro Financial Market Seminar is a capacity building program for exchanges in Africa. It's one of the programs run under the Association of Stock Exchanges of Africa. And we do have a regular annual rotational conference in various markets. Now, the theme of this particular seminar was really around technology and how we can use technology to leverage and sustain the growth of the capital markets. Technology has become a very live issue in every aspect or in every sector. I mean, if you look at what's happening in the what the Uber's done in the taxi sector and a number of other disruptions that have happened. So the capital markets cannot remain oblivious of this. They cannot remain less concerned about how technology can disrupt their business. I mean, we're hearing things around blockchain. We're having new assets like the cryptocurrencies coming in.
Yes.
So we had to really focus and drill down on what are these new technologies and how can we then be able to adopt them to support or to remain relevant in the future of how trading will happen. Now, the major takeouts out of this is that we cannot remain speaking about disruption, but we must speak about sustainable innovation. Exchanges must continuously adapt to new technology, must continue to do their business focusing around the technology. Public-facing technology is becoming a very key issue. For instance, in Kenya, we did that with a product called Emakiba, where we were able now to, for the first time, be able to provide access on a retail, on a mobile platform. Issues around blockchain and how blockchain can be useful to help us, especially on the post-trade side. So it was a really open discussion and bringing experts to sort of bring us top of mind on this. And I must say that very good recognition on Kenya, especially in how we're really adapting to new technological trends and really how it's been able to really transform how we do our business. So it was a very good conference, and on the sidelines of that, there was a heavy discussion around how then do we make markets more relevant to the economy by providing alternative capital raising channels, and it speaks to the issue that you probably want to raise around IPOs. And so it was a very good interactive process.
Right. Also, we just recently, I think last month, investors lose 191 billion shillings on NSE in 2 weeks. What was really happening around that particular development? Maybe you can tell us more about that. And also, Deputy President has asked the NSE to list new firms. There's a slow uptake on enlisting new firms at the Nairobi Security Exchange. Yeah. You can tell us more about this. Why is there a slow uptake when it comes to listing?
So what you're referring to in terms of losses are really market movements. And that continuously happens. I mean, we've had a very good rally since the beginning of the year. The market has been up almost close to 4%. Since January, and at some level there's profit taking by investors who are holding strong positions, I mean positive positions. So you do expect to see a cyclic movement. So there wasn't really a particular concern about the state of the market or the state of the economy. It was just normal market movement. I would say it's a cyclic trend. And really, that's an aggregate figure based on our market cap when stocks just for instance, devalue based on demand and supply factors. The challenge we got from the Deputy President is something that we embrace. We think it was a good conversation we've had. We're really working closely with government to see how we can be able to unlock more IPOs. I think taking a step back in really what's been happening since the last major IPO, which was Safaricom. I think the markets have been going through different, has really been impacted on by different factors. I think if you look at the last 3 years, for instance, different issues have been affecting the market. We had capital gains tax in 2015. We had issues around the global economic environment, especially with the commodity prices shutting down. We had the elections last year, which was again a bit of a stretch compared to what we had anticipated. And that, of course, doesn't provide us a conducive environment for companies to list. A lot of companies are looking at coming to the market at the right time in terms of valuation. They're also keen around issues around ownership, shedding ownership, looking at the regulations. Compliance is something that they're concerned about. So we have to address those issues. But what we are really trying to do and working with government is we need to look for big IPOs, and these are really, most of them are state-owned enterprises that we think can provide a catalytic effect to the market. The last time we saw that was Safaricom, and not even Safaricom, Kengen in 2006. And after Kengen, we had almost 7 private sector IPOs. So that catalytic effect is so important because it then provides a good feel for the market. Issues around branding and visibility are things that we're really trying to help. And the exchange has really been focusing on how to continuously innovate. As late as yesterday or the day before yesterday, we had now approval to go into a pilot phase for the derivatives market. Now that just continuously provides a good feel effect about the market. So we've taken the challenge positively, and we are working very hard to make this happen.
Thank you. And I think also you opened a good debate also on the issue of tax, because that has been a crippling factor on people enlisting to, the NSE. Yes. So also the Capital Markets Authority is proposing a tax amnesty for companies intending to go public, also as it seeks to end the prolonged listing drought. We can discuss about taxes right now. Of course, also we know we employees will be also taxed. And I think with this, we need to debate aggressively this morning so that we see, is that the way to go? You had something to say.
To hike taxes?
High taxes, or also with a tax amnesty for companies wanting to enlist at the NSE. Let's try and rope in all this together when we're talking about tax regime. Also, we'll hear from the governor as well. Aly-Khan.
So just on a few points, I think that, the privatization program that culminated in Safaricom and Kengen, Kenya, and a number of other things was one of the most progressive and wonderful programs in the history of Kenya since independence. It was that big. I remember being in this building when meeting people who were holding certificates and would be so proud, and even if it was 100 shares. And what was it doing?
When NSE was here, the first floor,
I used to come here, I'd faint because there was no air conditioning, but I would be in there, and it was packed in those days. We created 2 million new owners in our society. What is our big problem is ownership. People need to feel they own something, even 100 shares. So I think from a societal point of view, it was incredible. From an economic point of view, it was getting the government out of business, because they've got, if you look at the government's portfolio, there is no way that they can effectively manage that number of businesses, in my view. So I think that's the first point to make. And I think the CEO is right. He's been a tremendous architect. He's built a really good house. But now we've got to get people to fill those rooms. That's the next step, right? The derivatives market, when you look at the initiatives that have happened under your tenure, they've been substantial. But the question is now, how do you get people to come and play in those spaces? And that's the next key point, I think. Regarding your issue, just quickly touch on the markets, because you're quite right, the stock market hit a record high on the 5th of April. We were up about, and since then we've fallen 11%, just so people get the numbers, which is quite a steep drop. But what we've seen is overall market conditions change. They've metasized. So what has happened is we're seeing a flight back into the dollar. US interest rates are climbing higher, risk and money is receding. There was a flood of cheap money that came to the world via these QE programs. That is receding. In fact, it's a little bit like the last hurrah. I'm so glad Henry did his Eurobond, because I don't know whether it's going to be possible to do Eurobonds at the rates that were done in a few months' time if the trend continues. We've had a big sell-off going in global markets right now, right? And it's of course going to hit emerging market currencies are down 7% in 2 months. I mean, this is a good old-fashioned crisis that's baking here. Argentina's peso interest rates up to 40%. They've had to call up Lagarde. Some African countries still avoiding calling up Madame Lagarde. They're going to be calling her up. They've got no choices. Zambia is another example. So big change is happening. You know, to assume that the benign market conditions that existed for the last 3 years are going to exist anymore seems to me the poorest bet that you can possibly take. And what worries me now is that, you know, policymakers tend to react slowly to market changes. That's the nature of a policymaker. They're slow to react. The market will change, and a month later it'll go, oh my God, our Eurobonds are 10%, how did it get there? The problem is, things have changed, we've got to get sharper. Now, what does that mean to me in our economy? It's not about raising taxes, it's about reducing expenditure. And showing us that you can reduce it. We're in a new 21st century. We can measure everything. Start looking at how you change it. Let me give you an example. Uber. I used to pay my guy 3,500 shillings to get to the airport from Windsor, where I live. Uber is 800 bob. Okay? Now you're telling me, and that guy, I ask them all the time, are you making, we're doing 20 trips, I've come back from Dubai, I bought my car, they are making money doing that, right? This is the equivalent of what our government is doing. It has to be Uberized. And we've got to see our people tell us we're going to Uberize it. Because if you keep taking more money from us, and this was one of the attractions of Kenya, it's a free market economy. We understand that, you know, there's nothing wrong with a foreign investor coming and making a profit. In fact, we're glad you make a profit because you'll come back and put more money in, right? But if you start to fool around with the stuff, it's not going to work. And furthermore, what happens when you start putting up taxes? What is everyone going to do? They're going to work out ways to evade it. So what you do is, in fact, forget that, cut the tax. You will get more revenue within 24 months, proven. It's worked all over the world. So I'm concerned about this direction. I think it's the wrong one, in the sense that we're desperately looking for more revenue. Why? You're looking for more revenue because you're running the government in the way that we were running it before we had Uber. Uber yourself, otherwise you'll get Kodak'd. And I think we got to see as a country that happen.
All right, Robert Shaw, we Uberize or we get Kodak'd, right? I like it.
Totally. I would actually broaden the whole subject. I mean, I think one of the things is, you know, government has got to get out of some of these operations, or certainly reduces exposure. We've talked about Kenya Power. You know, it's a dead hand in a lot of these operations. We've got to create a lot more. We've got to get a much better environment all round, so that people say, I want to invest. I want to put my few shillings into X, Y. I have to, you know, I'm embarrassed to say it, but I don't own a single share on the stock exchange. I don't. It's not attractive to me. I'd rather put my money into government bonds. So yeah, no, well, it's the overall environment that would convert me. I can see the possibilities, and I follow it, and I have been a shareholder. I was involved. I was one of the first shareholders in, for example, Kenya Airways. But at this particular time, I would say, as someone looking at it, overall, there's a lot more to be done. And I'm not, from your side, I think you've done a lot. But overall, to get that attraction, to get things moving, and also to get the economy moving, and it will get it. Because, you know, I mean, it's an irony, because you have here such a dynamic entrepreneurial economy. I mean, it's fantastic. I was, you know, as I was walking here, I saw people setting up their little stalls and everything. And I thought, at this time, you know, this is amazing. No, I mean, it's so, you know, the dynamism is there. Tap it. We aren't tapping it, or the government is not allowing the space for it to be tapped. I mean, you know, they're quickly going around and putting half of these people away. So I think we've just got to look at, you know, that bigger picture attraction, and it's going to attract many people, small, big, the lot.
The question of why we don't get more listings, or many listings, is, you know, and for many years discussion. I think the bank, IFC, and everybody, and the exchange itself, and I don't know whether we are we have been able to figure out why is it that, given the dynamism that Robert Shaw is talking about, why are we not getting many SMEs? For, you know, when the original SME segment came about, we thought we would get many. That didn't work. So even the newer segment for SMEs, where really, I think you need what, 10 million shillings? If, 10, and you don't even need to
for gems.
For gems. So and you don't. And, I don't think I don't think there's a requirement for profitability.
No, it's not.
And you need to be around for how long?
1 year.
1 year.
So it's not, yeah.
So I frankly, as an economist, I'm at a loss to explain why the requirement is 10 million shillings balance sheet, and you don't need to be profitable. Why are we not getting thousands of SMEs? You know what is 10 million? Take somebody who operates a bus for carrying passengers. I think a bus will set you what, 15 million maybe? Yeah. So a fellow with one bus is
Well, that might be the problem.
So I would have thought you would have a really long queue of small and medium-sized businesses listing, but they are not. So I think some work yet to be done, Ali, to understand what is the roadblock. Now, I know we've spoken about listing costs, and maybe that's a discussion that needs to be revisited. What does it cost?
What does it cost?
Me
CEO.
to, yes.
Sorry, I didn't mean to.
Okay, as he gathers his thought, but I think he must tell us. He must tell us.
Yes.
So listing costs could be another question. I'm glad he raised the issue of innovation. Now, the CMA has been going around talking to counter governments and others to say, look, you know, how can you use the capital market or this, to raise appropriate capital for whatever that you're doing? And I think that this is an area, again, that the Securities Exchange has to reflect on. Now, you can say counterism is managed or whatever, and fine, just put that on the table. But the point is this, Ali, if you go to exchanges like say Toronto, you raise penny stocks to go prospecting. They are speculative. You don't know if you'll find anything in the ground when you go to check whether there is coal or oil or some other thing. And everybody knows that. Yeah. So the security is priced appropriately. Why shouldn't I be able to say, look, my water companies are positive cash flow. One is in fact profitable. You know, why shouldn't I be able to say, look, 10 or 20%, let me put it on the market so I can raise $1 billion shillings or whatever to do more in that sector. So I think that, or even any other county-owned.
That's exactly how I wish every single governor was speaking, because I think what you just said there epitomizes for me what the opportunity is. There is an enormous opportunity, and I think as a governor, the fact that you've said that, you understand it. Balance sheet space is running out. We all know that. We've got to be more innovative around it. Even the president, I heard him say, we've got to look at ways of not utilizing the government's balance sheet. So I think you're absolutely correct. There is an enormous opportunity for you, and I think the success and failure of governorships and the next time we have elections will be those governors who make these decisions like you do, to look at the whole spectrum of what they've got in their county. The water company, you're absolutely right. You pay people a good dividend, they'll be happy to invest in that. Yeah. That will be a blowout sale. You've just come up with a great idea. So there are a bunch of them, I think, that can happen.
Right.
It's just got to be well managed, and you've got to be consistent.
Right.
And that people will look for you.
Right. Let's say from Gabriel, before we come to you, or Oduno, then to explain also on a raft of issues also that you are quoted on the dailies as well, because it's in some of the incentives that you'd raised, like withholding tax on dividends and interest income, has done little also to bring new listings on the Security Exchange. You'll tell us more about that. But let's hear from Negatu.
I don't follow very closely the capital market, but what I can say is any rational investor will look at his risk and his options. And in Kenya, I think there are several alternatives outside of the CMA that I mean, if Robert says he doesn't have, he doesn't hold any stock, it's not because he doesn't know about it, but he's looked at government papers and feels, you know, I mean, a better, less risk and better return. So it's a function of several things. But having said that, the Nairobi Stock Exchange is perhaps, the capital market in general is one of the better performing in Africa, even though, I mean, things are going down at the moment, but when you look at the other bourses all over the continent, it's the same story. So Nairobi is an exception, but still I'd be quite bullish about the CMA here.
Right. Dundo, you were quoted in one of the dailies saying that the government has done a lot to energize the securities market. However, we have not managed to attract new large players. The reason being that some SMEs are not comfortable with the disclosure requirements. We're talking about SMEs from the governor. Fear of losing control, relative weak macroeconomic environment, and the perception that the cost of listing is a bit high. And also the deputy is wondering, the deputy president, how ironical it is that NSE is ranked the 5th largest in Africa, yet only a few members of firms control close to 80% of its activities.
Thanks, Diba. And thanks for reminding me about that statement. Second time today.
Take it head on.
I think, yes, quite right. I mean, in terms of incentives, we provide incentives. Tax incentives are there. Even really incentives on the market. For instance, we don't have capital gains tax in Kenya. Dividend is taxed at 5%. So it's really a lot has been done to create that opportunity. Now, just to address that issue of concentration, I think concentration is not unique. If, for instance, if we went to Qatar Stock Exchange today, I think they've just about, I think the last time I met them, they have just about 40 companies, and that's a huge market. They were big companies. Here we have about 6 companies controlling about 80% of the market cap today. So it's really, we need to really focus on how can we dilute that by bringing in big companies onto the bourse. And that's what I was saying around how can we work with government to get more huge listings from that sector, and also engage with the private sector to bring large listings. So I think it's really not a bad thing to have, because we want more and more big companies, and hence we'll to just provide more opportunity. Because also don't forget, Kenya today, our market today has almost 70% foreign traded. And some of these are big ticket deals. I mean, these are people who don't put less than $5 million in one stock, and they're looking for that kind of opportunity. If we continue listing just medium and small, then we really don't get that kind of investor into the market. So we really have to focus on that end. Back to the gems, and thank you, Governor, for being very on top of things when it comes to our markets. We brought this market in 2013, and really we so far have about 5 companies. Now, the big challenge has really been, I think, first of all, we need to really provide more, build more understanding around it. I think people are still, there's a lot of perception that it's not a market for me. One, I'm going to be giving away control. If I give away control, do I control my company anymore? Issues around coming under more surveillance, I mean, more regulatory oversight. That's a big, sudden fear. So it creates that level of apathy from this kind of investor. We've done a study around it, and we are now really changing that conversation to try and see, because today when you're running a business, you can no longer hide from the regulators as such. I mean, the oversight is improved, tax coverage has improved. You should actually look at the other values of this listing around brand building, for instance, of your company, around tapping into capital, alternative capital. Okay, so those are the things that we continuously have to sell. But the big inertia has just been the issue around letting go, which are, especially when you look at the our small and medium-sized companies that are really doing good businesses. There's that fear of losing control, and we're really working on how to address that.
Thank you.
Cost of listing are very affordable. I think, for instance, coming to the gems market is about 100,000 shillings to really regulatory fees. The decision to it's an approval done by the exchange. So in terms of turnaround time, it's quick. The conditions as requirements are pretty low, 10 million, and you really can bring just an asset. For instance, a bus.
Thank you. Thank you.
So it's something that we just need to continuously build on.
Right, thank you. Right. Let's come to Governor Nderitu, because to you also, we're given to understand that Laikipia are among the counties to get less funding over low revenue, right? And you will lose close to 400 million shillings allocation from the National Treasury in the next financial year for failing to raise the requisite levy 2 years ago. And you've accused the national government of reneging on agreements with the Council of Governors concerning fuel returns. Maybe you can clarify this, why the shortfall that you do have right now, okay, and how it's going to adversely affect also your operations within the counties.
Well, 400 million, that's a whole department. That's all of my infrastructure. So it's quite significant. Now, the formula for horizontal allocation, meaning how you share the money between counties, includes a factor that is called fiscal responsibility, which basically is a yes/no. Did you increase your revenue collection? It doesn't matter by how much, but if, for instance, you had 300 million last year, in the subsequent year, have you collected more than 300 million? Now, there are 6 counties that are affected by this, because between the year in 2016, 2017, they collected less than they had the previous year. And this is Laikipia, Kirinyaga, Kiambu, Tharaka Nithi, Trans Nzoia, which then means that they don't, the board, it's supposed to be an incentive, by the way, but the formula needs to be improved. It's not working properly. First of all, because it's not pro rata, so that a 2% drop is treated in the same way as a 50% drop, which is a bit not quite proper. But anyway, the overall point is that if you did not grow your revenue during the year 2016, 2017, compared to the previous year, you are not getting that fiscal responsibility bonus, if I can use that term. And that is why those 6 counties have less money than they got the previous year. Also, you have to figure in that the overall increase in equitable share was eventually capped at 4%, so that the increase, the natural increase, is less. It could not compensate that the loss of the thing. Well, I'm pleased to report that we are 115% of our target. So we will raise, we will grow revenue from what it was last year and grow it significantly, and that will make sure we are not in that problem in the future.
Someone like your county, what is your collection, for example, full year last year? What number?
Last year, the number that then cost the whatever was 463 million.
And then your total budget is how much?
Our total budget 4.8 billion.
Right, so you're doing about just 10%.
Just 10% from whatever. And as I said, we are well above that number of 463. So the issue will not hurt us come next financial year.
Thank you.
This question of negating, this is what happened. There are some roads
very briefly,
called Class D. So the fuel, maintenance fund, fuel levy, a negotiated agreement between the national government and the Council of Governors to move the allocation to 20% from 15%, but ultimately negotiated and signed off. But when the allocation bill was done, it was done at 15%. And that's the point, that they negated on something agreed.
Thank you. Even as we're winding up very briefly, we know Gabriel and Gatu, you are actually in Kigali when we had the African Free Trade Continental Agreement. We can just brief us on that, the multiple membership by countries. Of course, we know it has been a major source of tension. Some of the issues that were raised there, we cannot exhaustively talk about them here, but just briefly, what are some of the high spots that you took away from that particular conference that we had in Kigali? Very briefly.
Thanks. You know, this is a process that has been ongoing for several years. The whole idea being to make Africa one big, seamless market. This is a continent of 1.2 billion people and an economy of 2.2 plus trillion dollars. Therefore, it's now one of the biggest trading blocks. Mm-hmm. Now, the idea was to have all members of the African Union sign up to this free trade. And then there are other ancillary things about free movement of people and so on. But the main one was on trade. And as I said, the whole idea is to reduce everything except tariffs, you know. Most countries seem to be signing up. I think we had about 44 countries that signed up. A few notable absences, Nigeria, South Africa, some of the bigger economies, but it's not that they're negating the idea, but it was more a process issue. Nigeria, I think, claimed that there was not enough consultation with the business community, and South Africa has since declared that it will sign up, so it was just a matter of process. Mm-hmm. But the beauty of this is that countries like Kenya, who have relatively developed manufacturing sector and so on, will stand to benefit because it will open access to several markets outside of the East African community. So it was President Kenyatta was one of the, in fact Kenya is one of the first to not only sign but to ratify. I think there was a second country to ratify and file their thing with the AU. So I think this country and several others in the region will stand to benefit from it. So it's good for Africa.
Right, thank you. We will give 30 seconds to each of you as we're winding up your closing remarks. And of course, looking at today's Daily Nation, we'll be remiss if we don't talk about it because this is clearly on the issue of the Treasury and the CS Rotich, where Aly is saying, hey, sack Rotich, Team Uhuru. Right.
I don't know the merits of the IFMIS system, which I think is what
this is clearly on the IFMIS
of what the subject is. So I can't opine on that. All I'll say is I really think at this moment in time that we need to look at and avoid massive tax increases, and we've got to look and study that, and that's what I asked the Treasury to focus on. Yeah.
So yeah, we're increasing tax here. On the other hand, then of course, if IFMIS is taking away, of course, Monarch's money, we need to tighten, the systems as well. Let's hear from Robert.
Just open up the space, make some of these institutions, like Kenya Revenue Authority, more efficient. And I don't mean more efficient in terms of enlarging the taxes, but just more efficient in operating. There's a lot of loss all round. So I think generally, all round, open up the space, create the opportunities, the energy will move this economy fast.
Thank you. Geoffrey.
I think for me it's just to re-emphasize that the capital markets is an alternative funding channel for especially private sector. And really we can be able to tap into the market because we have actually got the desirable depth. We raised over 100 billion shillings in the last 3 years through equity and debt. And so we should support government by coming to the market to raise capital and let the banks then focus on SMEs and retail to enable them to do their business and reduce the crowding out effect in the banking sector.
Thank you.
Well, let me invite these panelists and especially Jeff to the Innovation and Entrepreneurship Fair in Laikipia. Over 130 SMEs on the 30th and 31st of this month at Nyahururu Stadium. And I hope we can convince those SMEs to go to Jeff's market. Thank you.
Yes. Good harvesting ground for you. Let's hear from...
very quickly, the topic we didn't touch on today was the recent visit by the Prime Minister of Ethiopia.
Yes.
But a very successful visit here.
Yes.
Met the President and his team several times, agreed on several mutually beneficial agreements, and I just want to say all those pundits who were concerned about a big influx of Ethiopian refugees coming to Kenya can now rest assured that the only thing coming across will be goods and commodities and power coming from the other side.
Thank you so much.